I know a lot of you are preparing your 2012 tax returns, and there was a lot of concern during the fiscal cliff discussions and how that was going to affect your tax return. So I put together this slideshow to run through the basic pros and cons of what took place. The good news is that many of the changes from the 2012 tax relief were positive for most taxpayers, especially if you were below 250,000 single and 450,000 married. They made permanent the extension of lower tax brackets from 10% to 35%, and they increased the AMT exclusion with inflationary adjustments. Instead, this AMT has been sort of a secret tax that was going to affect about 44 million people, and now will affect only about 7 million. Another thing that they did was to create the estate exemption permanent of the exemption up to $5 million. It was $1 million the year before and was needed to be made permanent because it's been voted on every year at a different amount. Capital gains rate is going to stay at 15%, except for, again, if you are higher income tax earners of 400,000 single, 450 married filing jointly. And even more good news, most provisions extended to 2013. If you're a school teacher, you still get a $250 above the line deduction above the line for AGI. Mortgage insurance premiums are still being able to be written off as an itemized deduction. You still have a qualified tuition deduction with the American tuition deduction credit. Tax redistributions from IRAs to charities have been extended. A 15-year class for leasehold improvements has been extended. And the Section 179 deduction, which we all thought was going to eventually decrease to $25,000, has been extended to $500,000 for 2012 and 2013. It may be reduced in 2014. 50% bonus depreciation on new assets has been continued. So those are the good things. The bad news, the bad news is that the higher tax bracket of 39.6% for higher taxable income, $400,000 for single, $450,000 again for married filing jointly, is the highest tax bracket we had, and it's been there hasn't been a change in a tax bracket for over 20 years. Itemized deduction phase out on gross income is $250,000 single, $300,000 married filing jointly, and the increase in estate tax from 35% to 40%. On the first two items here, that is really when they are reducing your phase out on itemized deductions, you're actually increasing the rate to higher than 39.6%. So higher income earners are getting hit hard. The ugly news is the expiration of a 2% Social Security holiday. So all of the paychecks, your net pay is going to be decreased by 2% for Social Security costs. The employer health care costs are on the rise. There's a 3.8% Medicare surtax that's going to take place on higher income earners. Those who make a wage of more than $250,000 are going to also see an increase in their Medicare deduction out of their paycheck. And now the much anticipated rollout of Obamacare early in 2014 is coming, and we're going to be talking about that over the next couple of months. So stay tuned. Hope you all enjoyed. Thanks.